Hershey is a stock I find really interesting right now. If we zoom in the last year, not done particularly hot, down 14%. And going from highs in 2023 around 275 a share, we're all the way down to 163. So it has not been doing well. Technically, over the last 5 years, you wouldn't have lost that much money, but you would have lost an opportunity cost. If you factor in dividends, you probably would have about broken even, which, considering what the S&P 500 has done over the last 5 years, that's not a very good performance. But the main reason it has done so poorly is because of cocoa prices. Cocoa prices have shot up. This is the 10-year chart. You could zoom out more if you wanted to. This is the main ingredient in chocolate. Therefore, the crazy increase we've seen it go from, it's like, what, early 2023, and it wasn't even that low. It was at, 3,500. We're at 11,000 right now, so 4x. If you go a little bit further back, it's even more than that, closer to 5x. That is a crazy high increase, and you can see the correlation with it going up in early 2023. The price, as it continued to rise, the stock price continued to go down and down and down, because when the price of cocoa goes up, your margins are going to just get destroyed. You either have to increase your product cost, which is going to lose buyers. You're going to have less demand at that price that you're selling it at, or your margins are going to get destroyed. They're going to get slaughtered. So not particularly hot, and that's why people are out on Hershey. People are like, okay, cocoa prices are high. I'm out on it. I'm selling. I don't want to be in it. However, I'm here to give you the bull case for this. I think there is a pathway forward where you can make money from Hershey's. Now, let's break it down. So my case for Hershey doesn't involve this magical turnaround in 3 months where the stock is just hitting all-time highs. No, nothing like that. But as a long-term play, there's some opportunity here. So if we're looking at the cost of cocoa going through the roof, I am no cocoa expert, believe it or not. Maybe you can find some commodity channel that can break it down better for you. However, from the research I did, from what I understand, a lot of it is just crops getting destroyed. Where a lot of the cocoa is, it just kind of got destroyed. So there's not a lot of it. Obviously, supply going dramatically down, it's going to shoot the price up. And because it's not generally a high profit margin commodity crop to grow anyways, there wasn't a whole lot of it. So that destruction just shot its price through the roof. So if we think rationally long term, the vast likely scenario is that cocoa prices are going to recover some bit. They're going to go down a little bit from where they are. Now, it may never be the levels they were. I'm not claiming that. But if it can go down in 2, 3, 4 years, you're going to lose a lot of this crazy downward worry. You're going to lose the pressure on you as a business. And that's very likely to happen. Very likely that prices will recover and not be quite as extreme as where we're seeing. So in the meantime, if we assumed it took 2, 3, 4 years, what are we getting out of this stock? Well, now you're getting a stock that's paying you really a solid dividend at these levels, 3.34. That's not bad at all. Yeah, maybe that gets cut a little bit if it really starts cutting into the profit margins. But even if that's the case, you're probably going to see a continual downward for Hershey, where you can DCA in. The dividend's probably still roughly the same amount. I don't know. It depends on how bad it truly is. But at the end of the day, a lot of the downside is already priced in. People understand the price of cocoa, and maybe it's not being priced in enough. You can make that argument, but to say it's not priced in at all is a little bit of that. And like I said, we're getting that dividend in the meantime. Now, if this, like I said, was to be cut dramatically more than I'm expecting, yeah, that might be a negative. But somewhere in the 3% dividend range, that's not bad at all. If let's say it was 2 to 3 years, cocoa prices recovered, the stock price recovered, you're getting that solid dividend in the meantime, and then the upward momentum, maybe it doesn't hit 250, 270, maybe it hits 225. That's still not bad for a stock like Hershey. It's not a tech stock. You're not expecting that ceiling, that 200%, something like that. That's the wrong play here. But like I said, if you want a solid dividend in a company that probably isn't going anywhere, they're a brand that's very well established. Everyone knows Hershey. It's very, very well established. So that's a good sign. And another element to the positive side of things for Hershey is something that's a little bit unique. Hopefully I can convey this point to all of you. Not that it's crazy hard to understand, but there's a concept of a barrier to entry. Most of you probably know what I mean by that, but the harder it is to enter a business is generally a good thing. For example, Boeing. The only reason Boeing is still around, My opinion, if you want to invest in them, I'm not dissing you or anything like that, but I don't think anyone is going to disagree that Boeing has not been on a very successful run as of late. If Boeing was something like a vehicle company, it'd be a lot worse for them. The greatest thing Boeing has going for them is it's basically just them. Not maybe Airbus, that's another one. Boeing and Airbus, who else? Who else does it? Who else does it? There's no one else. That's another reason I love a company like TSM. Gotta shield TSM in every video on this channel. Such a huge barrier to entry, and they have a pseudo monopoly. No one else can enter it because it takes hundreds of billions of dollars of investment to get competitive. So if you see cocoa prices shoot through the frickin' roof, all the startups in the chocolate space are not going to happen there. I'm sure there's not a lot of them, but there's some. There always is. The brands are not as well established as Hershey. Everyone's going to get hit hard, just as hard. Hershey has the name and the brand, and probably other brands as well, where they're going to be able to weather this storm a bit. Much more than a company that's not as established, not as... So, technically, I mean, obviously, if cocoa prices through the roof forever, that would be very not good, but 2 to 3 year period where you're killing off some of the lower competition, the long run might help Hershey. I'm not saying it is, but that's not a crazy thing, and you can see this play out in some other areas. I already mentioned vehicles before. Like, for example, Tesla doesn't really back tax credits for EVs. You may say, well, why is that? Well, it's because Tesla is huge and established enough. Yeah, I mean, it helps them a little bit. But what helps Tesla more? Getting a little bit of a tax credit for an EV or Rivian not existing? Now, I'm not saying no tax credit would make Rivian not exist, but it hurts. It hurts them. It hurts the startups. It hurts others trying to get into the industry. There may be less incentive for a company that's not doing as much EV stuff to get in there. It's just barrier to entry generally is good, and there's not a whole lot of barrier to entry other than like it's hard to get into retail spaces for Hershey, and there's such an established brand. So something like this, assuming it's short term enough, it doesn't just tank the business itself, can actually in the long run kill out some of that competition. Of course, I'm not advocating for it. I'm not saying, yes, I love businesses blowing up. I'm not saying that, but it may be a reality. So, and I'm not sitting here saying I'm some expert in the chocolate industry. Maybe there's someone that knows this sort of space, the retail food section areas of companies. Maybe there's someone out there on YouTube you could find. I think that's probably maybe too niche, but I'm not sitting here saying I'm some expert. Oh, I know this is going to be benefit. I'm not. But just as a generalized concept, Hershey, even though the situation's not particularly good for the company, there's still opportunity here. I think you can make a good case that, and also the last piece I want to touch on of the puzzle, and I kind of mentioned it earlier, where a lot of it is priced in. Of course, could get worse. I'm not saying every cent is priced in because we do not know that. You could get cuts to the dividend, things like that. So hear me, I'm not saying Hershey's 100% priced in. I'm not saying that at all. But the point I'm making is there's already an expectation that it's not going to do well because cocoa prices are high. I saw it in my comment section in the video I made earlier about it. It's just the reality. So there's a concept when a company is not expected to do good and it does good. If it should be priced at $245, but people already have it at $230 because they think it's going to do pretty well. It going up to $245, if it's at $180 or $155, whatever it may be, and it goes up to $245, you're obviously making more. People are out on a stock. You have a lot higher chance to make better gains. Of course, there's certainly reasons you should be out on a stock. Not every stock does well. Just because it's down doesn't mean it's cheap. I'm absolutely not saying it. Let's just look at a very extreme example. 2007, 2008, stock market crash, recession. Ask any stockbroker that was dealing with fairly regular people, even probably multimillionaires, but just generally managing retirement accounts. Ask them what was happening in 2007, 2008. What do we always say? If you have the money in a recession, you don't absolutely need it, you hold through it. Unless you can time, right before the bottom perfectly and buying at the bottom. Almost no one can do that. It's so hard to do, especially when emotions are involved. But ask any stockbroker what was happening in 2007, 2008, assuming they weren't doing like the multi 0.001%. Everyone was selling. Everyone was selling because it's so hard to go counter to the grain. There's a few people buying, of course there were. That's when you should buy the most because the upside's so much higher. And like I said, I'm not saying Hershey's going to do well. I'm not. But the bull case. There's many factors that bode well for them in the long term. Short term, I do not expect this to recover to like 240, 250 within the next year. Who knows? Maybe not in the next 3 to 4 years. However, there's definitely worse stocks to buy right now. Anyways, I've made this video plenty long. Appreciate all of you for watching. If you enjoyed, appreciate if you like or subscribe. I do daily stock content on this channel. I'll catch you next time.